Morning, everybody. I'm Joe Ryan. I run the energy team in the Americas for Bloomberg News, which covers oil and gas production from Alaska all the way down to Argentina. And as you've heard today already, Western Canada is blessed with an enormous amount of natural gas. But to bring all that fuel to market, you need a tremendous amount of pipelines, storage tanks, and other facilities. And we call that stuff the midstream. And it's the midstream because it is between the wells, which is the upstream, and the refineries and the distribution stream, which is downstream. And the environment to develop midstream infrastructure in Canada has shifted significantly in the last couple of months under Mark Carney. So we've got three terrific guests here to talk about that. Before we launch in, let's just hear a little bit about their company so all of you know where they're coming from. Scott, can you tell us a bit about Pebina?
Sure, I'll try to be brief. Pebina, as you pointed out, is a Canadian midstream company with assets that span all of the commodities, crude oil, natural gas liquids, condensate, and then a growing LPG and LNG export business. For Pebina, our assets mainly consist of 6.7 BCF a day of gas processing. We ship over 2 million barrels a day of crude oil and NGLs and condensate. We have over 20 million barrels a day of above ground storage. And we have a $4 billion backlog which we're currently executing on, including our flagship Cedar LNG project.
Got it. And Eileen, can you introduce us to Keyera?
Sure. Keyera is, we would describe ourselves as a natural gas liquids infrastructure company. Really, we process the natural gas and we extract the higher value natural gas liquids. We then have the infrastructure to store, transport, and ultimately market the end products. That's what we refer to as our integrated value chain. We primarily handle propane, butane, condensate, and we also produce a high-value gasoline blending component called isooctane.
And Vern, could you tell us about AltaGas?
Hi, AltaGas is a diversified energy infrastructure company. We own 4 gas utilities in the United States, providing American gas to American customers. In Canada, we have a fairly significant midstream business where we're primarily focused on exporting natural gas liquids to the best market for that product, which is in Asia. And we export the lion's share of that product from Western North America.
Great. Eileen, can you kick it off and tell us a bit about the midstream needs in Western Canada and how they fit into the nation's growing role as a global energy supplier?
Yeah, absolutely. I think maybe I'll start with some context. So Canada is, we produce more hydrocarbons and NGLs than we consume domestically. So we are a net exporter, exporting market. And you know, our energy is among the most abundant, meaning we have lots of it, cost competitive, and responsibly produced in the world. And you know, what has really constrained our ability to move that product to global markets has been the lack of egress or takeaway capacity for decades, for a very, very long time. And what that resulted in is our customers, or the upstream producer, was really receiving a price that was at a deep discount relative to the international benchmarks. So now, you know, over the last 2 to 3 years, that has really begun to shift and change. And we are unlocking our ability to move that product to global markets. So with LNG Canada, you know, beginning to ramp up exports off the West Coast, with the Trans Mountain pipeline expansion that came on in 2024, that has unlocked egress for crude. And then, of course, the export infrastructure that is being built by my fellow panelists here, or has been built as well. So that has significantly helped to unlock some of those constraints. So as we kind of look at the future, you know, I'm really excited about the future of Canada and the role we have to play. I think for the first time in a very, very long time, the country is getting aligned on the need to position ourselves as a global energy leader. And by that I mean there's improving public sentiment. There is more alignment within industry and government. We have a lot more to do to get there, but I think we're starting to see significant change on that front. So when it comes to midstream companies, assuming the returns are there, we are ready to invest in the infrastructure that is required to support that growth and to connect our energy to global markets.
And Scott, how has the regulatory environment begun to shift since Carney took office?
Well, I would say from a tone perspective, it has shifted. I think we've seen really positive tone from the federal government. They obviously came out with their Bill C5, which is going to fast-track nation-building projects. As of right now, there's one project on that list that really impacts the three of us here on stage, which is LNG Canada Phase 2.
And C5 is the One Canadian Economy Act.
Correct, and that's helping progress. But unfortunately, LNG Phase 2 was already in progress and was advancing, and so I think what we'd really like to see is to get incremental projects on that list. And what you've seen recently is Alberta the government become a proponent to try to move that a new crude oil pipeline from Alberta to the West Coast. And I think to me that signifies a little bit of industry's still hesitation with what I'll call the last 10 years. And so what I've found fascinating is it really is a chicken and an egg problem. The government came to power and they reached out to industry and said, bring us projects and we'll help advance them. And industry said, well, we haven't really been working on them for 10 years because there wasn't the environment to do that. And so I just think both sides need to be patient with each other as we continue to advance. And that's on, I'll call it the major projects. In the background, we still need to see things like, okay, you have a crude oil pipeline, but if you have an emissions cap and you have a tanker ban, if you can't fill the pipeline or empty the pipeline, what's the point of building a pipeline? So there's still things that need to be sorted out. And then just day-to-day regulation, we still see, compared to provincial regulation, the federal regulation is much more stringent, takes much longer, more complex. And so I still think there's work to do there. So I guess overall, I'm optimistic, but we still need to make some progress on some of the regulations.
Got it. And one of the things that the Carney administration done is opened a major projects office. Can one of you tell us a little bit about that and whether or not you think it'll move the ball?
Well, that's really to help shepherd Bill C5 and how they're going to execute the projects. I think for our industry, there was some very clear signs. Number one, it's headquartered in Calgary. Number two, it's headed up by Don Farrell, who was the CEO of Trans Mountain and really got that pipeline across the line. So industry experts based in Calgary, to me, that sends a real signal that Bill C5, while it's a One Canadian Act and it's going to look at all industries, there will be a focus on the oil and gas business because we know that's what's going to drive our economy.
Got it. Vern, your company has a significant footprint in both the U.S. and Canada. You own utilities in the U.S. You were involved in the Mountain Valley Pipeline development. Can you tell us a little bit about the differences between regulation for infrastructure projects, both north and south on the border, how they're similar, how they're different, et cetera?
Well, I think, Joe, that there's been difficulty with infrastructure both in the U.S. and Canada for the last decade or so. Depending on where you are in the U.S., regionally it can be very challenging to build infrastructure in the U.S. just as it is in Canada. The great example you mentioned is the Mountain Valley Pipeline. It took 10 years to get permitted and built. I think in the U.S., the president is working away on trying to streamline permitting, and in fact, the National Petroleum Council, which I'm a member of, is working with Secretary Wright to see if they can fast-track projects. Scott mentioned the Major Projects Office in Canada, which is the first step at looking at how do you improve permitting in Canada, but ultimately in Canada there needs to be a clearer path and probably the repeal of several pieces of legislation to give project proponents the certainty and the legal status to pursue major projects. So again, it's depends which province you're in, which state you're in, the speed you'll get permits. We operate a gas utility in the Washington, D.C. area where we operate in the city, Maryland, and Virginia, and they're all within 20 miles of each other, and the jurisdictional permitting between those three states is going to be massively different, which is no different than BC, Alberta, and the federal regulations we see in Canada.
And Eileen, you're nodding your head in agreement there. Is there anything you want to add?
No, other than, you're right, we have a lot of work to do to repeal some of the policies that have been put in place over the last 10 years, but you know, we're at least starting to make progress in that right direction.
Got it. Yeah. Is there anything significant that you think one country could learn from the other in terms of, you know, something that is being done well in the U.S. that perhaps you'd love to see done in Canada or vice versa?
Well, in the U.S., the companies generally have the ability to move their projects from state to state, region to region, to take advantage of faster permitting. You'll see that U.S. infrastructure companies will primarily focus on Texas and Louisiana, where things can get built quickly. Unfortunately, in Canada, the resources are in Alberta and parts of BC and are landlocked and have to go through other provinces to make things happen. So we don't have that structural ability to move capital and projects around.
Got it. Let's turn to LNG, which is liquefied natural gas, and it plays a big role in bringing Canada's energy to the rest of the world. Scott, you guys have a project in the mix. Can you tell us a bit about Cedar LNG?
You bet. It's a 3.3 million tons per annum floating LNG facility. And what's unique about this project is that it's the first Indigenous-owned, majority-owned project in Canada. So we have a partner on the project, Haisla First Nation. They own 50.1%. We own 49.9%. So true governance rights, true board of directors, and it's the first of its kind in Canada. And
what's the advantage there?
Well, it's about true reconciliation and working with your partners. They have a seat at the table, a voice at the table. You know, many of the other deals that have been done in Canada have been, you know, minority interests where it's essentially a financing and there's not really a say in the day-to-day and governance of the asset. And so this project is in their traditional territory, and they have a voice on how it's constructed and how it moves forward. And so we're really excited to have them as a partner. We FID'd that in 2024. This year, in 2025 mid-year, we started steel cutting, which essentially means the start of the floating LNG vessel. We actually had remarkable weather in Kitimat. For anyone who's been up there, it rains like 250 days of the year, and we didn't have any rain this summer. So we almost constructed the entire pipeline, you know, this summer, which we thought was going to take over 2 years. So
Kitimat is about 200 miles northwest of Vancouver, so it's pretty far up there.
Yeah, good point. And so as of right now, construction's going very well. We expect to float the vessel over in early 2028 and hook it up. And you know, it'll be about 400 to 450 million cubic feet a day, which doesn't sound a lot, but that's 2 to 3% of gas production today in Western Canada. And when prices in Western Canada are, you know, over the last 3 weeks have been anywhere from negative 50 cents to positive 25 cents per MCF, compared to 350 NYMEX in the US, we need every project that's possible to consume natural gas or get it out of Western Canada.
Let's dwell on that for just a second. So when you said prices go negative, that means that prices go so low that they literally fall below zero, and producers need to pay customers to take the gas away, which is obviously not what producers want to have happen. Can one of you just explain briefly kind of how that dynamic happened over the last couple weeks?
Sure. I think what we saw is some egress outages on a couple of pipelines and a temporary shutdown on LNG Canada. I think what happened is supply had grown with the LNG Canada coming online. And when you see these hiccups in the energy infrastructure, you see that there's no place to move the natural gas, as it's almost like a real-time production process. And then with those situations, you'll see prices drop dramatically because there's a limited amount of natural gas storage to put that product away.
And so it really is evidence for a lot of the things that we're talking about here in terms of the need for more infrastructure.
Absolutely.
Vern, while we have you here, can you tell us a little bit about your propane export projects on Ridley Island?
Sure. So Canada is also a major exporter of propane, which is a natural gas liquid. And Canada produces about 500,000 barrels a day of propane. About half of that gets used in the country. And the balance gets exported to either the United States or Asia. The U.S. is obviously long propane, with one of the being the biggest producer of propane in the world. And it already exports its propane to Asia and other countries. So Canadian propane is the cheapest propane in the world, highly discounted. And by being able to export to Asia, we can get the best pricing for our customers. And in fact, by moving that product to Asia, we can, on average, increase the netback on a barrel of propane by about $10 a barrel for our customers. So we're in the process of building our third propane export facility on Ridley. This one's on Ridley Island. It will be a very significant facility where the initial phase is 55,000 barrels a day of exports. We're very close to FIDing an optimization of that expansion already. And then ultimately, the project is being built where we have wharf capacity and rail capacity to do 10 times what we're doing in phase one. So effectively, as NGLs grow in Western Canada over time, we'll have sufficient capacity to export all of that to Asia.
And Eileen, can you tell us, Keyera just in the last month or so announced a very significant acquisition to buy Plains Canadian natural gas liquids business for about $5 billion. Can you tell us a little bit about how that really changes the game for your company and how it fits into all the things that we're talking about here today?
Yeah, absolutely. Yeah, we were really excited to announce that acquisition. Let me take it back to our strategy. Our strategy has been to enhance, extend our value chain. So our value chain, when I refer to that, it's really the infrastructure and services to move product from wellhead right to end market. And this acquisition, there's really no other acquisition that fits our strategy better. When we bring the two platforms together, we get greater efficiencies, significant cost synergies, and ultimately, and broader market access. So we're able to access markets across the country, but also into the U.S. And it really does bolster our propane value chain. And really that fits into, we've partnered with AltaGas as well to move propane so we can provide that to our customers. It can go to the east, or it can go to the west through AltaGas's facility. So ultimately what this all means is it's great for the customer because it means we can provide a more cost-effective midstream all-in solution for the customer. I think the other really important thing to note is that we are now bringing these assets that were owned by Plains All America back under Canadian ownership. And so our goal is the cash flow that's generated within that company, we want to retain and reinvest within Canada in more infrastructure, which again creates more jobs and more opportunities.
Got it. And Scott, you told us a little bit about your LNG project, kind of the other side of that demand, the domestic demand revolves around data centers. Can you tell us about your plans for a power plant near Edmonton?
Yeah, thanks. We put out a press release yesterday morning just updating the market in terms of what we're doing in Western Canada for an innovation center right outside our Redwater facility. And so the goal of that project, it's a 50-50 joint venture with our partner Kineticor, is to build up to a 1.8 gigawatt power plant, behind the fence power plant, really to power large innovation centers in Alberta. And so
1.8 gigawatts is enormous. It's like the size of two nuclear reactors.
Yeah, it's billions of dollars of investment. And what we also like about it is that it consumes natural gas. And that's also a key component of that project. Pembina is not in the merchant power business, and that's not what this is. This power plant will only go forward if we strike a deal with our innovation center partner. And the goal there is to build 1.8 gigawatts, but also tie that to an Alliance expansion, which is a pipeline that we own today. We'd like to do a short-haul expansion of that pipeline, feed natural gas to the power plant, which will then power the innovation centers in Alberta. And again, that would consume somewhere in the neighborhood of 300 to 400 million cubic feet a day, which is, again, a 1.5 to 2.5% demand for natural gas. And just anything we can do to help the demand side of natural gas will help, just given the pricing dynamics. So we're really focused on what are the projects that can add value to that gas molecule. So that project, we press released some of the milestones, a land sale, and the advancement of that project. We ordered our turbines in order to secure our spot, with an overall FID expected in the first half of 2026.
Got it. Well, we would love to have all three of you back in a couple of years and hear more about these projects and how they progress and how things unfold under the new administration. But in the meantime, thank you for joining us today. And thank you, all of you, for listening. And that's it.